All right, good morning, everyone. I'm sure you're all excited to talk about Social Security, so without any further ado, let's get started, right? This is my contact information. I know some of you in the room, I actually used to be a realtor. That was a little while ago, but this is my current contact information. My name is Brad. I'm a financial advisor. I work for RBC Wealth Management just up the street in Albuquerque. Just to be clear, I do not work for Social Security. You can be skeptical, you can be critical, you can call it a Ponzi scheme. You're not going to hurt my feelings. Here's what I'm going to cover in addition to any of your questions. You were all nice enough to take time out of your schedule to be here, so raise your hand, shout something out, interrupt. This is going to be a lot more fun if it's interactive as opposed to me just lecturing at you for the next hour. So in addition to your feedback, your questions, here's what I will cover. Number one, will Social Security be there for me? A couple of reasons I start with that question first. By the way, I am intentionally not using the microphone. If anybody in the room cannot hear me, just let me know and I will use it. But if I use the microphone, I have to stand there the whole time. So just let me know. Anyway, number two, how much can I expect to receive? Number three, when should I apply? Number four, how do I maximize my benefits? Let me stop there. I was reading an article a few years ago. It said there's something like 700 different ways to claim Social Security. So good luck. And that's really the way the system is set up. We pay in for years, or probably more like decades, and then when it's finally time to get that money back, it can be a little complicated, a little confusing. So we'll talk about some ways to maximize the benefit. And then lastly, will Social Security be enough to live on in retirement? Anybody want to tackle that question for me now? Probably not. I mean, unfortunately, there's a pretty large percentage of the population, and that's all they're going to have. And I'd say for those folks, this decision is really crucial. But for the rest of us, time permitting, towards the end of this class, I'll talk about ways to look at Social Security in the context of the other moving parts and puzzle pieces of retirement. So talking about the value of Social Security, or is there even any value left to it? Again, some people call it a Ponzi scheme. I've heard it referred to as social insecurity. But I think if I had to pick one word, I might call it a pension, maybe. So in theory, this is money that you will not outlive. Just as a quick example, let's say somebody is retired, they're claiming Social Security, they're getting $2,000 per month. In about 10 years, they've taken just about $276,000 out of Social Security in the form of monthly paychecks. Now, don't get me wrong, that's a lot of money, but that's roughly a break-even point for most people that I speak with. You ever look at your pay stub, you're trying to figure out who's FICA, why are they taking so much of my money? So every time, probably not a relevant question in this room actually, but every time we earn income in this country, we have to pay into this program called Social Security. And typically, if I have an employer, I pay 6.2%, my employer pays 6.2%, but if I'm self-employed, if I'm an independent contractor, then I have to pay both halves. So it's 12.4% of everything that you make is paid into this program called Social Security. I might ask you to do some math. How many years have you worked? How much money do you make? You've probably paid in at least tens of thousands of dollars, but it's probably more like hundreds of thousands, and that's before you get anything back out. That's the idea of this presentation. That's a lot of your hard-earned dollars. Let's be smart about this decision. Now, Social Security has a built-in inflation adjustment. It's referred to as the cost of living adjustment, or COLA for short, C-O-L-A. I'm using 2% on the screen. That's actually an underestimate. Anybody know what the COLA is this year? 8.7. 8.7. Last year it was 5.9. Next year it'll be 3.2. I typically use a smaller percentage. That way, if I'm wrong, it actually works out to the benefit of my client. But if we look at that same 2% and that same $2,000 monthly check, in 10 years, what was $2,000 is now closer to $2,400. In 20 years, it's closer to $3,000. In 30 years, it's closer to $3,600. So the good news is there's this kind of sort of way of keeping up with inflation that's built into the system. But obviously, there's times when inflation is greater than the cost of living adjustment. We see that a lot in housing, quite frankly. We also see that a lot in college planning, college education. Bless you. And then almost always, we see that with healthcare, Medicare, long-term care. So there's a whole other class that I teach about Medicare in retirement. That's another fun-filled hour you can spend with me if you want, but just take that 2% with a grain of salt. And as I mentioned, this will be the first major question that I tackle. Will Social Security be there for me? A couple reasons I start with this question first. Number one, there's not always 24 hours worth of news, but there are certainly 24-hour news programs, and they're constantly vying for your attention. So maybe some compelling story about Social Security going broke is a good way to get you to tune in. And then also, if the answer to this question is no, then this is the shortest presentation you've ever attended. Claim as soon as you can and enjoy your breakfast. But I'll show you some numbers. You can tell me what you think. So assuming no changes are made to the system, benefits are fully payable for roughly the next 11 years. And then assuming no changes are made to the system, benefits would be reduced by roughly 20 percentage points. I'm not saying this is a good thing. Nobody wants to take a 20% pay cut. What I am saying is, when it comes to Social Security, there are built-in phase-out periods. What you're looking at on the screen is the first phase-out. So in roughly 11 years, benefits go down by 20 percentage points. The second phase-out is roughly the year 2096. Benefits would go down by a few more percentage points. Not sure about you. I'll be about 120 by then. And so here's the deal. Social Security is not this giant on-off switch. It's not like it's here one day and then just disappears the next. It would very slowly unwind over the next several decades, assuming no changes are made to the system. Here are some proposed changes, some ways to keep the system solvent. That first bullet point talks about a maximum earnings subject to Social Security tax. So this year, 2023, if I am fortunate enough to make $160,200 or more, I'm done paying into Social Security. Now, one proposed change is to raise that number. $160,200 is kind of an arbitrary number anyway. Maybe make it $250,000, maybe make it $500,000, maybe make it $1 million, maybe just remove the cap altogether. And the running joke in my office is NBA, NFL, Major League Baseball, tax those guys on all of their earnings. You keep the system solvent for ever, maybe throw in movie stars while we're at it. But that's one proposed change, one way to add solvency to the system. And then I think for sure we'll see some changes on the second bullet point where it talks about raising the normal retirement age. Normal retirement age is the same as full retirement age. If you've ever gone to the website or checked your statement, you've seen that three-letter acronym, FRA, full retirement age. It's the same as your normal retirement age. And one of the big deals about your normal or your full retirement age is that's when you get your full benefit. So if I claim at full retirement age, I get my full check. If anybody here was born 1943 to 1954, then your full retirement age is 66. If anybody here was born 1960 or later, it's 67. Anybody want to interrupt and ask a question? Yeah, what happened to the rest of us, right? 55 to 59. So Tony, you can never retire. Sorry. Now, here's the way it works. So 43 to 54, it's 66. 1960 or later, it's 67. For those of us born in between, we have kind of an interesting full retirement age. So if I was born in 1955, full retirement age is 66 and 2 months. If I was born in 56, it's 66 and 4 months. So for every year later, they add on the extra 2 months, and then eventually we get back to 1960, and full retirement age is 67. To try to briefly put these numbers in context, this whole idea of Social Security first came around in 1935. Roosevelt was the president at the time. And at the time, full retirement age was 65, which for some of our clients seems to make a little more sense because typically you sign up for Medicare at 65, full retirement age is 65. Those two numbers synced up. But obviously this changed. And the question that I might ask is, when? When did this change? Bush years? It was actually Reagan. It's actually 1983. Reagan was in office. He made several changes to Social Security. We'll talk about one of those changes later in the presentation, but one of those key changes was to push back full retirement age. It used to be 65. Now it's 66 or 67 or somewhere in between. Let me ask you this. When Reagan increased full retirement age, was there mass rioting in the streets? You don't remember the great Social Security riots of 83? No? So there's not mass rioting in the streets, mostly because it didn't affect anybody past the age of 30 or 40, and I don't get too many 30 or 40-year-olds in this class. So they pushed back full retirement age. There's not mass rioting in the streets. So on this previous screen where I say, oh, it's simple, just raise normal retirement age. I'm not saying they're gonna raise it by decades. I don't even think they're gonna raise it by years. I think if your current full retirement age is 67, by the time you get there, it'll be more like 67 in 2 months, 67 in 4 months. There's a precedence for this. Those first two bullet points, that's really all the fixing that we need for Social Security. There's talk about lowering benefits for future retirees. Perhaps they'll mess with the COLA. But long story short, from most people that I talk to, I really don't think there's going to be much, if any, in the way of changes to your Social Security. You want to tell me they're going to grandfather in changes for the next generation and the younger people? Sure, maybe. But I think for most people in the room, you're not going to see any changes to your Social Security. I want to make this point. I think for some people, some of the time, claiming the benefit early or as soon as possible is probably the right decision, but I don't think it makes sense to claim early just for fear of the system running out of money. I mean, you're talking about the federal government, right? If the federal government goes broke, by the way, good investments are going to be guns, bullets, chicken coops, whiskey, propane tanks, bomb shelters, okay? And you know when they're going to fix Social Security? It's fully payable for roughly the next 11 years. You know when they're going to fix this? Probably 11 years. I mean, right? If anything, the past couple months, we've seen that Congress is really good at kicking the can, not really deciding much of anything. Try to keep all my comments as apolitical as possible, but I think we're going to hear about this for the next 10 or 11 years until they finally do fix it, and I think they're going to wait until the last minute, and it's going to be some back office handshake deal, and they're going to snatch victory from the jaws of defeat, and then both sides are going to say that they won, and the whole routine that we're used to. Anyway, I will demonstrate fairly briefly how benefits are calculated. If there's any numbers people or math people in the room, you might find this interesting. If not, just take what you want and leave the rest. The formula gets a little bit weird. One of the things I will point out is that Social Security is looking at our highest 35 years of earnings. So it does not need to be consecutive. Maybe I went to work, I took time out to raise the kids, I go back to work, that's fine. Or I go to work, take time out to go to school, I go back to work, that's fine. So the highest 35 years, they average that number, they index it to inflation, they come up with this thing called the AIME. It stands for Averaged Indexed Monthly Earnings, or AIM for short. They take the AIM, they divide it by 3 bend points, which I will demonstrate on the next screen, and the answer to all of this is your PIA, your primary insurance amount. So the PIA simply equals the benefit that you would get if you claim at full retirement age. So if your full retirement age is 66, if that's when you're claiming, then you're getting your PIA. And this is simply an example. This is an example of the benefits formula, but this is a very specific for instance. So your numbers are probably at least a little bit different from the numbers on the screen. We're just really looking at this for the concept. This example is specific to somebody born in 1961. So somebody who turns 62 in 2023. Let's say this person goes to work, they max out their benefits for 35 years. In this example, their average indexed monthly earnings, their AIM, is $11,430. Of the $11,430, the first $1,024, they're going to get 90% of that back in the form of a monthly check. In this example, that's roughly $921. This is the first bend point. That $1,024 and the 90%, that's the first bend point. On the second bend point, we're getting 32% of our money back. That's roughly $1,647. Last bend point's 15%, that's another $788. If you add those 3 bend points together, you'll eventually get down here to the number in blue bold, $3,357.60. So just as a quick, confusing example, somebody born in 1961 who has maxed out their benefits, this is the biggest check they're eligible for at their full retirement age. It could certainly be less, it will not be more. Do the words overly complicated come to mind? Are you kidding me? So Social Security does the math for you. If you've ever gone to the website or if you happen to still get statements, they'll show you what your benefit at your full retirement age might be. This is somewhat of a behind the scenes peek at where those numbers are actually generated from, but again, they will do the math for you. The earliest we can claim Social Security is 62. But if we claim at 62, we're not going to get the full benefit. Morning. Now, part of this depends on your full retirement age. If your full retirement age is 66 and you choose to claim at age 62, you're going to get 75% of your check. If your full retirement age is 67 and you choose to claim at 62, you're going to get 70% of the check. Long story short, the earlier you claim, the smaller the percentage. By the way, if you had one of those interesting full retirement ages, 66 and 2 months, 66 and 4 months, we'd have to do a little bit of extra math. But again, the earlier we claim, the smaller the percentage of the check we would receive. If my full retirement age is 66 and that's when I claim, then I will get my full benefit, 100%. If my full retirement age is 67 and that's when I claim, I will get the full benefit, 100%. Now, what some people don't realize is you don't have to claim at full retirement age, and why on earth would I keep waiting? I have waited long enough, thank you very much. I'd like my money back. Here's the way it works. If I delay my claim, there are delayed credits. So I'm looking at the column assuming full retirement age is 66. If my full retirement age is 66, but I choose to claim at 67 instead, I'm not getting my full check. I now get my full check plus an extra 8%. Or at 68, I get an extra 16%. At 69, an extra 24%. The system maxes out at age 70. I'm at 132% of the benefit. Yes, ma'am.
So, is that a fixed increase of 8% every year, or is it depending on how the...
So the question is this a fixed increase of 8% every year? And the short answer is yes. Doesn't matter if I've paid into the system or not, doesn't matter how much money I make, I took time off work to raise the kids, or I'm back in school, or whatever the circumstance might be, it's a guaranteed 8% per year. So the comment is, hey, I just read an article in AARP and they're saying 3.2%. So that 3.2% is the cost of living adjustment. So you missed that part, but I was talking about how there's an inflation adjustment that's automatically built into Social Security. So that 3.2% that you're referencing is the inflation adjustment. It's the inflation adjustment plus 8%. This year, the inflation adjustment's 8.7%. Next year, it'll be 3.2%. But if we take the 8% and add it to whatever the cost of living adjustment might be, we're typically talking about an increase from one year to the next that's well in excess of 10%. Yeah, good question. So it does not make sense for everybody all of the time to wait. I know that for some people, some of the time, claiming early is the right decision. So just as a quick example, unfortunately, my dad passed away when he was 67. So if his plan had been claim at 68, 69, 70, how much money would he have gotten from Social Security? Zero. Zero is not a good claiming strategy. So for some people, some of the time, I think claiming early is the right decision. And I think for some people, some of the time, the extra 8% might be interesting. Anybody here earning 8% in a checking or savings account? If you could raise your hands high just so I can see them. No CDs, government bonds, treasuries. You're not getting 8% in a government bond. Okay, so it's an interesting comment, and if you don't mind, I'm going to pick on you for a second. So I-bonds are interesting. They are inflation-related government bonds, and there was a period of time where they were paying almost 10%, 9.6, 9.7%. Those I-bonds adjust every 6 months, and so those I-bonds are now, and even, I don't mean to argue with you, you didn't lock in 9.6%. That's what it was at the time, and then every time it adjusts. So I-bonds are now paying closer to 3.25%, 3.5%. But you're right, at the time that you purchased it, it wasn't worth the 10%. And I thank you for the feedback. And I don't mean to seem argumentative, but point being, and if you couldn't tell, I was trying to be funny, it didn't work. But we're typically not getting 8% in any sort of investment. I will tell you that our money market fund is paying right around 5%. We have a tax-free bond fund that's paying closer to 6%. I mean, there's ways to maybe start to get close to the percentages on the screen, but I think for some people, some of the time, the extra 8% per year might be interesting. And just to be clear, I'm not saying that you have to work until 68 or 69 or 70. I'm saying maybe you wait. And so for lots of people, there's a big difference in the age at which they retire versus the age at which they start claiming Social Security. So more about that in just a couple minutes. Go ahead, Roberta. 5.07%. CDs, I saw a CD earlier this week paying 5.8%. I mean, I don't have to tell you guys deal with this every day. What's a 30-year mortgage? 8%, 7.5%? Like, so the good news is I'm getting 5-6% from bonds, from fixed income. The not so good news is if I'm trying to finance a house or a car, the interest on that loan is going to be really high. Couple different references or resources. These are all working links. I check them on a regular basis. You can log into the Social Security website. You can see all the years that you paid into the system. You can also find your statement where they show you what your benefits are going to look like. They actually updated, they did a full revise on the Social Security website. It's effective as of December 6th of last year. It's better, but it's a very dense website. There's a lot of content, a ton of facts and figures, a lot of numbers. You could probably pull up the website now and die before you're finished reading, or I have like less than an hour left in this presentation, so it's up to you guys. And I'm going to transition here and talk briefly about spousal benefits, because just by the virtue of being married, one spouse is automatically eligible for half of the other spouse's check. So quick example on the screen, John and Jane, let's say they're a married couple. His monthly benefit is $2,000. Hers is $800. If she claims on her record, she'll get $800. Or if she claims on his record, she'll get $1,000. Which check do you think she might prefer? Stupid question. Of course, she'd want the $1,000. She'd want the bigger of the two benefits, but there's not much about Social Security that's proactive. It's not like Jane claims on her record and then gets a friendly phone call from the local Social Security agent talking about spousal benefits. So I know I'm just a nerdy guy who gets way too excited about Social Security, but this is really found money for a lot of people that I talk to. Go ahead, Roberta.
So, you can claim on your spouses and what, yeah. I'm just trying to maximize these, okay?
Yes, you can claim on your spouse. And there might be other questions, so just hang on for 1 second, because I'll go through this slide, and then the next screen we'll talk about some of the rules. And if there's still leftover questions, I'm all ears. So I was just saying, though, I mean, I know that this is really found money for a lot of people that I talk to, because if they didn't know the rules, they're leaving money on the table every month. And so I am going to switch back and forth between this screen and the next one just to go over the rules. So if I want to claim spousal benefits, I have to be at least 62. Hopefully that 62 figure sounds familiar. I have to be at least 62 if I want to claim on my record. I have to be 62 if I want to claim on a spouse. Now I have to be married for 1 year to coordinate spousal benefits. And then lastly, one spouse has to file for the other to claim. So previous screen, same example, maybe Jane wants to claim on John's record, but maybe he hasn't filed yet. He's still working. He's too young, whatever the reason might be. She could actually claim on her record, and then when he claims, she could switch and file for spousal benefits. And that works because she's switching to a check that's bigger than the one that she was originally receiving. Correct. So the question is, what if I'm divorced? And if you don't mind, I'm going to ask you to put a pin in that. So we'll finish up the marriage part, then we'll talk about divorce, and then never a fun subject, but we'll talk about surviving spouses. So good question. I'll come back to you. Just to be clear, I'm assuming that people know this, but just to be clear, you have to pay into the system for 10 years or 40 quarters to have your own Social Security. Let's change one thing on the screen. Let's say that Jane was a stay-at-home mom. Not that she didn't work outside the home. Instead of 800, just humor me and change her number to 0. She hasn't paid into the system. She doesn't have her own record. Anybody want to guess what she could claim on John's record? It's still half. It's still 50%. And just to be clear, he gets $2,000 a month. She gets $1,000. That's $3,000 combined. It's not like she's taking money out of his pocket. Couple other thoughts. I mean, in a room full of mostly women, I certainly don't want to seem sexist. Obviously, there's women who out-earn their husbands. So this is just for instance. This is an example. But we could have Jane as the higher earning spouse. We could have John as the stay-at-home Mr. Dad, if you want. Change the names, change the numbers. You know, to that extent, Social Security now recognizes same-sex marriage the same as any other relationship. So really the example could read John and John or Jane and Jane. We're just after the concept. Yes, ma'am.
So if John passes, does she get all of his too? Because my friend is getting widow's benefit, but she was told that she was like in the last year of that. So she gets all of her husband's social.
She does.
Did that phase out?
No,
No?
no. But in the same way that I asked this woman to just put a pin in the question about divorce, right? No, and I thank you for the question. It's a good question, but I will come back to you. Go ahead.
So the 1-year marriage, I'm thinking of a family member.
I get a lot of friend questions in this presentation. I'm just saying.
If they've already started taking Social Security, both of them.
Yeah.
And then they get married, and they're married at least a year, then they can readjust it.
Correct.
Even though they already started.
Correct.
Thank you.
Yes. And I think everybody, sorry, I should be repeating all the questions. So the question was really just a point of clarification. Let's say there's two individuals and they both claim on their record and they're getting whatever, and then they happen to get married maybe later on in life. And if there's the ability to switch and file for spousal benefits after they get married, can they still do that? And the short answer is yes, as long as they've been married for at least 1 year. So, good question. Thank you. Yes, ma'am.
I also heard that when you do a claim, a spousal claim, does it reduce the benefit of the spouse?
So the question is, if I file for spousal benefits, does it reduce the benefit of the other spouse? The short answer is no. I will tell you this, I don't think this is what you're asking, so I'm probably giving you too much information. If you look at a Social Security statement or if you log in online, they're going to talk about a maximum family value or maximum family benefit. There are situations where dependents might be able to claim on a parent or sometimes even a grandparent. And if you have too many people claiming on the same benefit, at some point Social Security is going to be like, okay, time out. We're only going to pay so much of this person's full retirement age benefit. It wouldn't be relevant just if it's a spouse claiming on their record, but if there's other dependents also claiming on that same record, then we might hit that maximum number.
What if it's somebody that's married 5 times?
That's interesting. Again, I get a lot of friend questions. I'm working on a match.com for Social Security. So what if somebody's been married 5 times? They're going to pick the highest spouse.
No, but I mean, so one guy, he's had 5
What the heck?
and they're all trying to claim on it.
Uh-huh.
Does the last wife get SOL or they're all getting?
I'll come back to that. No, it's a good question. Any other questions here? Okay, so we talked about marriage. Now we'll talk about divorce. There are situations where divorce is kind of sort of treated the same as marriage, but there are some rules in play. So the marriage must have lasted for 10 years. The person claiming on their ex has to be unmarried, and the ex has to be at least age 62. But as long as these 3 rules are in play, then there are men claiming on their ex-wives, there are women claiming on their ex-husbands. And if you'll cast your eyes to the lower right-hand corner of the screen, more than one ex can claim on the same worker's record. So just let that sink in. I'm sure that at least a couple of you remember Johnny Carson. I know that he's deceased at this point, but just humor me for a second, because Johnny actually had 4 ex-wives, and 3 of those marriages lasted 10 years or more. So check this out. Johnny's ex gets half. Johnny's ex gets half. Johnny's ex gets half. Johnny gets all of his benefit. Johnny's current wife gets half. So it's not like they take the benefit and chop it up and split it up all these different ways. Johnny would never know that those women claimed against him. It doesn't affect him. It doesn't affect his now current wife either. I know this is weird. This is sometimes the point at which people say, well, no wonder the system is going broke. But I really don't think people know these rules. And so to go back to your question, yeah, if there's 5, if there's 50 ex-wives, in theory, they could all claim. Yeah. Yeah. Yep.
I can't even keep up with the one I have.
Exactly. The rules here are a little bit more lenient if anybody is paying close attention, because if I'm married to somebody and I want to claim on their record, they must have already filed. And if they haven't filed and I want to claim on their record, then I have to wait. The rules here are more flexible. It doesn't matter if my ex claimed or not. Again, as long as the marriage lasted 10 years, I'm unmarried, and my ex is at least 62. It doesn't matter if that person claimed, doesn't matter if they get remarried, redivorced. I'm not suggesting that Social Security encourages divorce, but the rules here are certainly more flexible.
So if you file on the spouse, do you get?
Wow. So let's say I'm married and I'm claiming a spousal benefit on the person that I'm married to, and then unfortunately that person passes away, and then I wait 9 months, 12 months, whatever, I get remarried, and I'm claiming a spousal benefit on that. I mean, I'm going to get the bigger or biggest check that I'm eligible for, is the short answer. You don't get both. I mean, I like where you're going with that, but you don't get both.
Every year I see a new wedding.
Yeah, right? The comment was, every year I see a new wedding. You and me both. Good questions. Any other questions here? Go ahead.
I may have made a mistake on this, but I did not claim full retirement. I haven't even applied for Social Security.
Okay.
I'm gonna give away my age here. Okay. I am nearing 70.
Okay.
And, yeah, and I still mountain bike and I still hike.
Awesome. Good for you.
So I'm so close. I'm a few months away. So I guess I should just, I don't even know when to apply. I have not
Sure.
learned how to be old yet. I don't know. I mean, I really don't know when to apply, which is why I'm here.
Okay.
So was that a huge mistake to have waited?
I don't think so. The question essentially is, did I make a mistake? Did I wait too long? The answer would be yes if, so this happens every year and I don't know why. Like the benefit maxes out at age 70. So maybe I'm 71, 72, 75, 89, and I've never claimed. That would be a mistake. Up until the age of 70, you're earning the extra 8% per year. And it does actually increase on a monthly basis. It's not like I have to, if I'm 69, I don't have to wait until I'm 70 to get the full step up.
On the site, it says 69 is this, and 70 is.
Well, sure. And if you want to tell me that website's a little bit misleading or not as honest or accurate or helpful as it could be, I'm not going to argue with you. But it's a monthly adjustment. So if it increases 8% every year, 8% divided by 12 is, I think it's going to put us right at around 2/3% per month. Yeah, right. So 0.67%. You could. And I'm sorry, because I don't mean to avoid your question. And as an aside, I'm always happy to help people with their application. I don't charge a fee to do that. It's the same application whether I help you, whether you do it by yourself, or whether you go to the office and do it with one of their employees. But when we get to that page, there's going to be, so it's October, or excuse me, it's November. So they're going to say, do you want the benefit to start November 2023? If the answer is yes, just you'll move on to the next part of the application. If the answer is no, there'll be this drop-down menu. You could actually go back up to 6 months. You can actually go forward up to your 70th birthday. So there's a fair amount of flexibility as far as when you might actually want the check to begin. But no, I don't think you made a mistake. And all of this is going to be hindsight. He who lives the longest gets the most checks. So obviously nobody knows how much time is left in their hourglass. But no, I don't think you made a mistake at all.
Well, and I've been working all these years.
Right.
And still plan on it. But, I've had those thoughts like, maybe I should have taken it. And then my husband's a year younger than me. He's wondering if he should wait till 70 or go ahead and take it. And he will have a bigger
Yeah.
check. So I
Yeah.
don't know.
Yeah. It's a good question. Go ahead.
So you continue to work, say you take it.
Excuse me.
And you continue to work and pay into Social Security, that'll just keep bumping up your payment in the long run too, right?
Yes, and I will talk more specifically about this in a few minutes, but it's a rolling 35 years. So 35 years is the formula, the math, the calculation that they use to determine my monthly benefit. It's a little counterintuitive, but even if I've claimed, if I'm still working, still paying into the system, still improving my record, excuse me, then I would actually see a slight increase in that monthly benefit. Yes, ma'am.
They automatically do that, or you're filing the tax return showing that, or do you have to file?
So the question is, does that happen automatically? And the short answer is yes. I mean, and we'll get to this slide eventually, but I always encourage people to double check their Social Security record. It does happen automatically. It's simply based on your tax return. But yes, it should happen automatically. Good question. Yes, ma'am.
So Brett, going back a little bit, my husband receives at 67, let's say, and 5 years later, I'm ready to claim, and I claim half of his if it's more than mine. It's half of his current of what he's getting 5 years later, or it's half of what he started at 67?
It's an interesting question. You're eligible for, so regardless of the age that he filed, you're eligible for half of his full retirement age amount. So maybe he claimed at 62, and again, depending on his full retirement age, at 62, he's going to get 70, 75% of his full retirement age amount. Even if he claimed early, you're still eligible for half of the full retirement age benefit, regardless of the age at which he filed. Yes, ma'am. So, and that's why I showed that example, and I know I've already, yeah, it was 3357, and that was specific to somebody born in 1961, somebody who'd be 62 this year. Typically, that full retirement age amount does go up a little bit from one year to the next. Did you have your hand raised, Jeannie?
Yeah, so the claimant on the spouse, half of it.
Yeah.
I told you earlier, I had my Social Security phone call.
Right. Yep.
Do I need to tell them that, or are they gonna mention that to me? Do I gotta go, hey, I want half?
It's an interesting question. And I don't disagree. So the question is, I have a scheduled phone call with Social Security. Do I have to proactively let them know whatever and I would, I don't want to talk too much shade, but I don't typically like those phone calls. I think that sometimes you talk to somebody who knows the rules backwards and forwards, and sometimes you don't. And that's why I'm always happy to discuss further. But I would proactively let them know what you're thinking. And you might get somebody who says, oh, I've never heard of that. You can't do that. It probably will be fine. I'm not trying to put any fear in you. But I've heard situations where we talk to somebody at Social Security and maybe they know the rules or maybe they don't. And I'm always happy to answer questions, and I'm always happy to help people apply for their benefits. I trust the information that I'm sharing more than I trust the people at Social Security. I hate to say it like that, but it's a good question. They didn't know. I've had conversations with people that work at Social Security. Some of them are nice as the day is long. They know the rules backwards and forwards. They've been employed by Social Security for years, maybe decades, and they are very knowledgeable. And then I've had experiences where you're talking to somebody and it's like, yeah, and that's part of the reason I teach these classes, but I appreciate the feedback. So when should I apply? This is probably the $64,000 question. If you will tell me the exact date and time of your death, then I will tell you exactly when to file for Social Security. Is that fair? I mean, it's frustrating, and I'm kind of making a joke about it, but there's some important factors that we probably need to keep in mind. Health status. If somebody is not healthy, yeah, we probably do want to have that person claim sooner. It's not fun to talk about, but you're not getting a check when you're not here. That being said, what about life expectancy? If there's a chance that you might make it till your 80s or your 90s, we can look at parents, we can look at grandparents. Does somebody exercise? Do they eat well? Do they smoke? We can kind of sort of formulate some sort of guesstimate for life expectancy. If somebody is going to make it into their 80s or 90s, we probably don't want to have that person claim early. We're probably leaving some money on the table. And some people simply need the income. Some people don't have the luxury of any of this information. Saw a lot of this during COVID. Some people lost their job, got downsized, didn't have a choice, had to claim. I get that. There's no judgment or criticism when I mention that. But the flip side is I've done a lot of these presentations, and every now and then somebody comes up to me afterwards and they kind of shrug their shoulders and they say, well, I didn't need the money. I just claimed because I could. This is one of the biggest financial decisions that all of us are going to make ever. Maybe we could argue that buying a house is an equally big decision, but this is a huge decision. I would hope that there's more planning in place than because I could. Is that what a lot of your buyers tell you? How come you're buying? Yeah, I was bored. No, people usually put a lot of pen to paper before they actually make that decision. I would hope it's the same thought process here. Now, I'm going to briefly step aside from the social security part of the conversation and talk about this dynamic. I mentioned there's a whole other class that I teach about Medicare. I'm not going to spend too much time on this slide, but what's interesting or confusing is that when we finally claim Medicare and we're already getting our Social Security benefit, the Medicare premium, at least part of it, is taken out of the Social Security benefit. So I'm demonstrating Medicare Part B. Part B is outpatient services, your annual checkups, your mammograms, that sort of thing. Most people this year are paying $164.90 per month for Part B. That $164.90 will come out of the Social Security check. If you haven't claimed Social Security yet, they will send you a bill in quarterly installments, but the premium comes out of the Social Security benefit. That's the lowest amount that somebody would pay per month for Part B, that $164.90. It's a sliding scale. They have these income-related adjustments. So if I make, quote unquote, too much money, I will end up paying more for my Part B premium. The top tier this year for Part B is about $560 per month. I'm not getting any better coverage. I just made too much money. And so sometimes the feedback that I'll get is, well, what the heck, they shrunk my Social Security check. That's probably the net result. What actually happened is somebody made, quote unquote, too much money. Their premium went up. Since the premium comes out of the Social Security benefit, the net result is that the Social Security check got smaller, but it's not because the check got smaller, it's because the premium for Medicare got bigger. So just to confuse things even more, and as I mentioned, there's a whole other class that I teach about Medicare. If anybody in the room is interested, please talk to Laura. I'm happy to come back. So here is a chart that condenses some of these numbers into one nice, neat package. I'll walk you through the figures. I will tell you that on this screen, we're assuming that full retirement age is 66. I know that's not realistic for everybody in the room. I can always customize this. But generally speaking, the earlier we start, the smaller the monthly benefit. So on this screen, if somebody claims at the age of 62, they're going to get 75% of their check. In this example, that 75% is right around $2,500 per month. The longer I wait to claim, the bigger the monthly check. Assuming I claim at full retirement age and assuming that is 66, I will get all of my benefit, 100%. There's that 3,357 figure that we went over way back when we were looking at how benefits were calculated. The column all the way on the right factors in the cost of living adjustment. I'm using a very conservative guesstimate of 2%. I'd rather use a smaller percentage and be wrong. If I'm wrong, it works out to my client's benefit. But by the time that person actually gets to their full retirement age, what would have been 3,357 is actually closer to 3,600. And then from full retirement age until 70, we earn the extra 8% per year. The system maxes out at age 70, no added benefit at 71, 72, 73. In this example, we're at roughly $4,400 per month. Factor in the cost of living adjustment, it's closer to $5,200 per month. You're going to get sick of me saying this. It does not make sense for everybody all of the time to wait. I think for some people, some of the time, claiming early is probably the right strategy or the right decision. And I think for some people, some of the time, the numbers in the lower right-hand corner here might be interesting. Any questions here? Go ahead.
So you say that, Social Security calculates 35 years of what custodial or
Yes.
So in the 30th year, you work contributed to Social Security, you make more money than 10 years ago. So will that take a big adjustment in your retirement money, or it will be the same, or whether you make more or less?
So the question is about the 35-year formula or calculation. So it's a rolling 35 years. So even if I've already claimed Social Security, if I'm still working and still paying into the system and increasing or improving my record, then I would actually see a slight adjustment in my monthly benefit. It's not going to be a huge increase because it's a 35-year time frame. So to move that number a lot, one way or the other, is going to take a lot of additional dollars. But yes, it's a rolling 35 years. I hear a lot of misinformation and half-truths when it comes to Social Security. Maybe there's other pensions. I mean, I've taught these classes at UNM, and for pension purposes, they look at the highest 5 years. This is the highest 35 years. The highest 35 years. It's the same formula for all of us. I just want to jump back to the screen, though, because sometimes the feedback that I get at this point is, okay, well, you're showing this example, and this is like some unrealistic pie in the sky scenario. Who pays into Social Security and maxes out their benefit for 35 years? So here's a general rule of thumb. The benefit at 62 is almost exactly, precisely the benefit, 50% of the benefit at age 70. So in other words, the benefit at 62 is going to be right around half of the benefit at 70. And that's going to be the case whether somebody is paid in for 10 years, 20 years, 35 years, whatever. So just as a general rule of thumb, the benefit at 62 is going to be half, or 50% of the benefit at 70. And sometimes people ask questions like, well, isn't there like a crossover or break-even point? I could claim as early as 62. Yeah, I'm getting a smaller monthly benefit, but if I waited until 70, granted the check's bigger, but I've given up 8 years worth of income, how long is it going to take me to catch up or break even? And if you look at this dynamic where the benefit at 62 is half of the benefit at 70, to some extent the answer is never. I mean, if the benefit at 62 is half, you will never get to where you would have been if you claimed at age 70. And the longer we live, the bigger the difference between the claiming strategy. So you can look at the left side of the screen, decide whatever number you think is relevant for life expectancy. I will point out that based on a recent census report in this country, average married couple age 50 or older, there's a 47% chance that one of you is going to make it to age 90. Sorry, maybe that's bad news for some people in the room. Maybe you don't want to live that long, but it might be a reality for some of us. I mean, all kidding aside, one of the unfortunate ironies in my world, people used to buy life insurance for fear of dying too young, and now sometimes the risk or the concern is just the opposite, and it's living too long and outliving our assets. So again, look at the left side of the screen. You can determine whatever you think is realistic. I'm going to look at the line item for age 90. If I make it till 90, having claimed at age 62, monthly benefit is approximately $4,200. If I make it till 90, having claimed at 70, monthly benefit is approximately $7,500. The difference from one column to the next will be the difference between dignity and poverty. Ties back to the point that I made earlier about single elderly folks living at or below the poverty level. This is a huge decision. Couple key points to keep in mind. That first bullet point mentions if you apply early, your benefit starts lower and it stays lower. This is basically an irrevocable decision. However, you do get a one-time do-over. You can claim Social Security up to a year after you got that first check. You pay all the money back. It's like you never showed up. You'd be writing a pretty big check to the government, but you could do that one time. But 12 months and 1 day, it's a done deal. There's no, I didn't know the rules, I was out of town, nobody explained it to me. It doesn't work that way. Second bullet point talks about the cost of living adjustments, how they really magnify the impact of the claim. We just saw that on the previous screen with the differences in those checks at age 90. And then lastly, if I'm talking to a married couple and perhaps one spouse or the other is concerned about providing protection for the surviving spouse when they're gone, then I actually think that for some people, some of the time, this conversation in general about Social Security also ties into conversations about life insurance and long-term care. I am insurance licensed. I probably talk myself out of more business than I talk myself into. But isn't that kind of what we're doing by having somebody wait to claim? We're getting more income. It's kind of the same idea of insurance. I'm not saying that waiting to claim Social Security completely eliminates the need for long-term care and life insurance, but I think it at least reduces that need. How do I maximize my benefits? Just a couple quick ideas. So we've already had some general questions in this area, but your earnings record is specific to you, and it's the same formula for all of us. So for all of us that are looking at our highest 35 years, now, as I stand up here, would it surprise you if I said that sometimes the government makes mistakes? Don't tell anybody, it's a secret. No way. Shocking, right? I should have asked if you were sitting down first. Shocking news. Sometimes the government makes mistakes. Please look at your record, make sure it's accurate. There is no point in paying into Social Security and not getting credit for those dollars. This will literally take you 2 to 3 minutes per year. But please look at your record and make sure it's correct. Because if it's not, there's not much about Social Security that's proactive. We have to let them know. And typically, we have to let them know with a tax return, W-2 statement, 1099 statement. Question? Yes. They're typically looking, the question is, for purposes of calculating Social Security benefits, what number are they looking at? They're typically looking at your adjusted gross income. Adjusted gross income. So your income before expenses, before deductions, before contributions to an IRA or a 401k, it's typically your adjusted gross income. They're looking at your gross income, so before deductions for self-employment tax, before any deductions, withholdings, any of that fun stuff. Yes. Okay. What did they tell you? I will double check. I certainly don't want to tell you the wrong thing. I'm happy to double check. I'm pretty confident in my answer, but I will double check. Sure. Go ahead, Roberta.
I filed an extension, and so they incorrect amount, so wait until January or February to fix that. They would not let me fix it this year.
Yeah, I'm not surprised. It's frustrating at best, but unfortunately that's the way the system works. And listen, I get it. I mean, I'm sure that you guys don't work 8 or 10 or 12 hours a day and then rush home to check your Social Security benefits and work on the retirement plan. Well, I mean, I don't know if it's like social media or technology or what. I feel like most of the people I talk to are busier than ever. We're all moving 1,000 miles an hour. And I totally get it that this stuff is frustrating at best. And it's like, whatever, I'll deal with it later. And it's easy for me to stand up here and say, but I mean, I eat my own cooking. I check my record. I think it's important and good for you for checking on it. Yeah. Yeah. Yep. So. Yes, you get to change it next year. So it is the same formula. Thank you for the feedback. It's the same formula for all of us that are looking at our highest 35 years of earnings, right? So if there's missing years, if we've paid in for 25 or 30 years and we have missing years, then that would negatively impact my record. We could argue that we could work a part-time job today and net almost as much as a full-time job did 30 or 40 years ago. And I've made this comment before, but there are people that have already claimed Social Security. They're still working. They're still paying into the system. They're seeing a slight increase. It's not going to be a huge increase, but they'll see a slight increase in their monthly benefit. But that comment sometimes ties into this next screen. And I mentioned this before, but there's this annual earnings test. And this is going to be relevant regardless of whether I'm claiming on my record, claiming on a spouse, claiming on an ex-spouse, claiming on a deceased spouse. If I make any claim for Social Security and I'm not yet at my full retirement age, if I claim early, if I claim before my full retirement age, and I claim Social Security and I'm working and I make more than $21,240, then for every $2 I go over, $1 worth of benefits would be withheld. So it's this 2-to-1 ratio. Here's a quick example. Let's say there's a 62-year-old, they don't know the rules. Let's say they're making $50,000 per year, and let's just say the limit's 20. Try to keep the math a little simpler. So the limit's 20, they're making 50. They're not yet at their full retirement age. They think they're being clever, they're gonna double dip. Hey, I don't even need that money, I'm gonna invest it. I could do a better job with my money than the government, right? So every $2 we're over, we give back $1 worth of benefits. If they're making 50 and the limit's 20, they are 30,000 over, meaning that $15,000 per year of their Social Security benefit would be withheld. By the way, take that 15,000, divide by 12 for the 12 months of the year. It works out to $1,250 per month. So if in that example, that person's monthly benefit was $1,250 or less, guess how much their take home is? Zero, nothing. This happens every year where people claim Social Security and they wait for that first check with bated breath and it never shows up. Why not? It's because of the annual earnings test. Now, once we reach our full retirement age, none of this is relevant. So prior to full retirement age, you're going to hit this number pretty quick. But once you reach your full retirement age, you can make as much money as you want. You can claim Social Security and there's no give back. Prior to full retirement age, you're going to hit that 21,240 number pretty quick. Here is coordination of spousal benefits. There were some clever ways to coordinate spousal benefits. Congress did make some changes to Social Security in 2015 to try to keep the system more solvent. In the interest of time, I'm going to very briefly go through these next couple of slides. This file and suspend was an interesting way of coordinating spousal benefits. It doesn't work anymore. It doesn't exist. If you'll recall, though, if I'm married and if I want to claim on a spouse, the other spouse must have filed. So maybe my spouse files for the benefit. They suspend their benefit, so they're not getting any monthly income, but they technically have filed, which now lets me file for spousal benefits on their record. And Congress, in their infinite wisdom, said, nope, can't do that anymore. There is a strategy that exists for a very, very small window of opportunity. Don't get too excited. I doubt that it's relevant for anybody in the room. I'm going to briefly go through the example. So Bob and Barbara are a married couple. They're both 66. His monthly benefit is $2,000. Hers is $800. We're going to have Barbara file on her record. She's going to get the $800 per month. Bob is actually going to file for spousal benefits on Barbara. Spousal benefits are half, or 50%. Half of her benefit is $400. So she's getting $800. He filed for spousal benefits. He'll get half of her check. That's $400. So combined monthly income, $1,200. Bob hasn't touched his record. He still earns the extra 8% per year. When he turns 70, he will switch to his number. And at the same time that he files on his benefit, Barbara will now switch to a spousal check on Bob. For Bob to use this strategy, he must have been born prior to April 1954. So it's 2023. That means he'd already be 69. Most people 69 have already filed. So this is really not relevant for most people that I talk to. Bob could still wait and still earn the extra 8% per year, but he'd have to give up that $400 per month in the meantime. So I'm just rushing through these slides because it's really not relevant to talk much about coordination of spousal benefits. And I wanted to save time because I know that everybody's favorite subject is taxes. It is possible, maybe even likely, that you will end up paying federal tax on your Social Security benefit. Here's the way it works. New Mexico used to be one of 13 states that taxed Social Security at the state level. Most people that I talk to don't have to pay state level tax on their Social Security benefit anymore. However, if you make quote unquote too much money, you do still have to pay state level tax on your Social Security. So as an individual, if I make $100,000 or more, I do still have to pay state level tax on my Social Security. As a married couple, if it's $150,000 or more, we both would have to pay state level tax. 85-ish% of the population doesn't have to pay that state tax anymore, but what you're looking at are federal considerations. These are federal tax brackets. It's a sliding scale, as are most taxes. So if there's a married couple filing a joint tax return and the household income is $44,000 or more, 85% of the Social Security benefit is subject to tax. Just to be clear, it's not an 85% tax. 85% of the Social Security is taxable, and then it just depends on whatever your federal tax bracket might be. And we can spend time later on figuring out whether or not this is fair. I'm pretty sure I already know the answer to the question. If you look at these numbers, I mentioned this earlier. I was asking when full retirement age was adjusted and pushed back, and I said that was 1983 when Ronald Reagan was in office. 1983 was also the first year that we saw Social Security subject to taxes. And believe it or not, all of those income figures have not changed since 1983. And thank God there hasn't been any inflation in this country in the last 40 years. And thank you for laughing, but I mean, this should be criminal. And by the way, typically when we talk about taxes, that income, that revenue, that money goes to the IRS. When we're talking about Social Security, this tax revenue goes back to Social Security. This is one of the ways they keep the system solvent. And if you knew this before you showed up, good for you. Most people have no idea. So when I say that I don't really worry about Social Security running out of money, this is one of the reasons. This is part of the way that they've tricked us for years and years to pay extra revenue or extra income into Social Security. So it is possible, maybe even likely, that some of our Social Security is subject to tax. If you look at $44,000 in the year 1983, it was good money. It was north of six figures. But today, I mean, it's kind of like starting level for most people that we talk to. Now, that being said, there might be some interesting ways to minimize the taxes on the Social Security benefit. There's a lot of interesting strategies on the screen, but I'm going to start with that second bullet point where it talks about IRAs and RMDs. So IRA is individual retirement account. RMD is required minimum distribution. If you have an IRA or a 401k or a TSP or a 457 or an annuity or almost any account that grows tax deferred or tax free from one year to the next, at a certain age, you are forced to begin taking money out of that account. The age is currently 73. There's been some confusion because it keeps changing. It doesn't even really matter what the number is. Just know that at some point, you're going to be forced to start taking money out of the IRA, the 401k type account. That being said, we can typically access IRA and 401k money as early as 59 and a half without penalty. So maybe somebody in the room likes the idea of the extra 8% per year plus the cost of living adjustment, but gosh, I don't want to have to work until 68 or 69 or 70. So what am I supposed to do? And some people, as we've already talked, choose to keep working. Maybe it's part-time work, maybe it's a side hustle, or maybe it's drawing down on IRAs and 401ks, which is probably actually a clever way to save on the tax bill. So money that comes out of an IRA or a 401k is taxed just like income. If you take money out of an IRA or a 401k and you're working, you're probably just paying extra in taxes. If you've already claimed Social Security and you take money out of an IRA or a 401k, you're probably just paying more in taxes. So for some of our clients, some of the time, the sweet spot is after I've retired, before I claim Social Security. There's no earned income in those years. We could go to the IRS website, look at the different tax brackets, be very strategic about how much money we take out of an IRA in any given year to make sure that we're paying the lowest percentage in taxes possible. We have clients that are literally saving 5 or 10% off of their tax bill every year just because of the sequence and the way that we do things. Doesn't work for everybody all of the time, but it's not what you make, it's what you keep. And if we could keep the IRS out of our pocket, great. Any questions here? Okay, so generally speaking, when I talk about Social Security, I like to look at some of the other moving parts and puzzle pieces of retirement. Some people are fortunate enough to have a pension. We just talked about IRAs and 401ks and this required minimum distribution. The age is currently 73. Maybe somebody has an investment portfolio, and I know that work is the last bullet point on the screen. I know that for some of us, work is a 4-letter word. Maybe you have your retirement date circled on the calendar in big red ink, and you can take this job and shove it in that whole routine. I will tell you, as an interesting aside, the whole concept of retirement is really made up. It was created 70, 80 years ago. That's where pensions came about in the first place. Pensions were a way of politely bribing the older generation. Please move aside, don't make a fuss, make room for the young bucks, the next generation. If you go to the dictionary, an interesting definition of the word retirement is the disposal of a fixed asset after its useful life. Ouch, I'm like an old toaster. So we deal with retirees on a daily basis. I'm going to stand up here and suggest that for some people, some of the time, the way to live successfully in retirement, the way to live longer is retire to, not from. What does that mean? If somebody is retiring to the couch or the golf course, that tends to make me a little nervous. And sometimes work is just about money, but not always. I think a lot of times it's about social interaction. It's about feeling good, engaging with other human beings. I think if COVID taught us anything, it's that some of us just don't isolate well. This whole shelter in place, it's devastating for some people. So I'm not saying that you have to work 50 or 60 or 80 hours a week, but for some people, the key to living longer, living a more successful retirement is some sort of work, some sort of engagement, some reason to get up and talk to other human beings. I'm going to take a few more minutes and demonstrate a Social Security analysis, which hopefully you'll find interesting, and then I'm going to let you all run. So the state tax for New Mexico, the state tax is mostly a non-issue. I just mentioned that if somebody makes, so as an individual, if you make $100,000 or more, then you'll still have to pay state level tax on Social Security. For a married couple, it's $150,000. But if you're below that threshold, then you do not have to pay state level. Right? I feel like I'm answering your question. You're telling me I'm not. So I'm saying, no, that's okay. There's other ways to generate income other than just work, right? So if somebody's income is higher than $100,000 as an individual or $150,000 as a married couple, then in that case they would still have to pay state level tax. Most people that I talk to, it's not going to be the case. And quite frankly, if I made that much money in retirement, I would gladly pay the state level tax on the Social Security benefit. So 85% of the New Mexico population does not have to pay state tax on Social Security. Yes, ma'am. Sure.
On pensions.
Yes.
I had heard, I don't know if this is correct, that if you receive a pension, my husband will have two separate little pensions.
Well, good for him.
P&M and county.
Okay.
Anyways, so someone told me that Social Security sees that, looks at that, and gives you less money. Is that true? Are they actually giving you less money just to raise your pension?
It depends, is the short answer. So another change that we can thank President Reagan for, 1983, there's the windfall elimination provision, WEP. So if I'm a government employee, or for some reason the Texas Teachers Union doesn't pay into Social Security, if there were circumstances or years where I was working and earning money and didn't pay into Social Security because I got a pension, it's possible that the dollar amount of the pension will slightly reduce the Social Security benefit that I will receive. That's just a brief overview. There's some other interesting rules, and if somebody works in the public sector and then they go back to the private sector and they paid in for 30 years or more, there's not going to be any reduction. Thanks for coming. So it depends, and if you don't mind, because the rules are so, I'll stick around as long as people want and answer questions afterwards, but just for the other people in attendance, but it depends is the short answer, and thank you for the question. So this is basically a glorified Excel spreadsheet, but I think of it more as a tool to figure out when should I claim, when do I claim. This is a married couple. I'm always happy to update and customize these numbers for situations of divorce or survivorship, but this is a married couple. I met with them earlier this year. All that I did here is I changed the name, so now it's Joe and Denise Sample. At the time I met with him, he was 64. She was 62. This is color-coded to try to make it a little easier to decipher. So everything in green is the husband's info. Everything in yellow is the wife's info. According to Social Security, if he claims at his full retirement age, $2,400 per month. If she claims at her full retirement age, $1,600 per month. Have to be at least age 62 if I want to file. They are there. So they could claim immediately, and perhaps the immediate claim really does make the most sense. I don't know. That's why we might run the numbers. Keep in mind, if he files at 64, he's not going to get his full benefit. In this example, it's closer to $2,100 per month. If she files at 62, she's not getting her full amount. It's going to be closer to $1,200 per month. If we scroll down here, we can look at the numbers. Again, I'm using this safe estimate, this lower percentage for COLA. I'm using 2%. I'm also using 85 and 90 for life expectancy. And if we scroll down a little further, we can see what the income numbers look like. So she claims at 62, $1,200 per month, $14,400 per year. He claims at 64. It's almost $2,100 per month, almost $25,000 per year. Combined monthly is almost $3,300. Combined annual is almost $40,000. And I think for some people, some of the time that's going to be tempting. Let's see, I get $40,000 per year not to go back to work. I think for a lot of people, that's a no-brainer. The benefit's going to increase a little bit from one year to the next. And I'm fast forwarding here. I am looking at all these years of zero. So I mentioned that he passes away at the age of 85, again, as evidenced by the zeros. In theory, you're not supposed to claim Social Security when you're dead. Not that some people don't try. But when they were both alive and both collecting, the combined annual benefit was just shy of $60,000. The surviving spouse gets the greater of the two checks, but not both. Hang on one second, Roberta. So in that next year, what was 60 is now more like 38.5. So that's a reduction of more than $21,000 per year. That's what I mean when I say that sometimes these Social Security rules ruin retirement for the surviving spouse. Now, that being said, if you look at all the money they took out of Social Security, add it up, put it into a big pile, we're just north of $1.36 million. So clearly, this strategy is not bad. It's not wrong. I don't get my feelings hurt if people choose to claim early. I promise you, they took out more than they paid in. So there's nothing wrong with this scenario. But there is another example that I'm going to reference. I actually ran 6 different scenarios for this couple. I will not bore you with all of them. But scenario 4 is probably my favorite. Same numbers up at the top. One of the differences here is that he is going to wait until age 70 to claim. His benefit at full retirement age is $2,400. He's picking up roughly an extra $1,100 per month for waiting a few years. I'm having the wife, Denise, claim at 67. That's her full retirement age. Her benefit is $1,908. It's reported to be $1,600 by Social Security. The reason this number is bigger than this number is because of the cost of living adjustment. So I'm not saying that Social Security intentionally misleads us, but if you don't factor in a cost of living adjustment, like when you look at your statement or if you log in online, they do not factor in any sort of a COLA. They do not, which kind of sort of makes sense. They don't want to overpromise and underdeliver, but then assuming that inflation is zero forever is also kind of misleading. And so sometimes the feedback I'll get is, well, here, look at the numbers. You know, the benefit at 70 is only a couple $100 more than the benefit at full retirement age. That would be stupid. I'm giving up so much income, and it would be stupid if those numbers were accurate. Scroll down a little bit further. We can see what the income numbers look like in this scenario. So in fairness, part of what I liked about that first example was they got money immediately. In that first year, if you'll recall, it was almost $40,000. Now the first year's benefit is nothing, zero. I'm sure that makes me really popular. That's the idea of planning. So aside from Social Security, that's what we help our clients figure out. Maybe somebody chooses to keep working. Maybe they have a part-time job, a side hustle. Maybe they start drawing down on IRAs or 401ks. We'd have to figure out some way to fill in the missing years of zero. When they are both finally claiming and collecting, the combined monthly is about $5,500. Combined annual is roughly $66,000. He passes away at the age of 85, again, as evidenced by all of the zeros. In the previous example, when he passed away, Denise was left with roughly $38,500. Now it's $58,700. I am more than $20,000 ahead here of where I would have been in that first example, and that's for having those years of zero on the front end. And in that first example, the total cumulative benefit was about $1.36 million. Now it's almost $1.7. I am more than $300,000 ahead here of where I would have been in that first example for having a few years of zero on the front end. And by the way, if you don't think that's a lot of money, then I am very adoptable. Anybody? No? All right, so I am just about out of time, but I want to briefly explain the handouts that you have in front of you. So the first page, front and back, just kind of a brief overview, some of the highlights from the class today. By the way, if at some point you got anything of value, please thank Laura. Laura and I have literally been emailing for months just to make sure that everything worked. This is a new room, which is awesome, by the way. But these events don't just happen accidentally. So if you got anything useful, anything valuable today, please thank Laura. I'd appreciate it. I'm sure she would as well. So again, that first page has a brief overview. It also has my contact information. So you can call me, you can email. I don't charge an hourly fee. If you have questions, concerns, I'm all ears. So you're welcome to keep me in your back pocket, think of me as a resource. That second piece of paper is an evaluation form. Towards the top, if you want, you can give me your feedback, good, bad, or indifferent. Tell me what you liked or what you didn't, or suggestions for next time. Towards the bottom, you can get back in touch with me if you want. You don't have to. But if anybody is interested in having me run your numbers, I don't charge a fee. That's a complimentary service that I offer. All that I need is your date of birth and your benefit at your full retirement age. This example is for a married couple, but I can customize this for situations of divorce, for deceased spouses. We haven't even talked about Social Security disability. We talked very briefly about dependents claiming on parents or grandparents' Social Security. So I can customize these numbers any number of different ways. If you're interested, you can circle letter A, put down your contact info. Letter B is really the reason that I'm here today. I am always looking for ways to spread the word about Social Security. Maybe you know other people that wanted to be here but couldn't attend because they were busy with work. If you want me to come do a sales meeting at your office, if you want me to come speak to your clients. I mean, I don't know what you guys think about sales. I think a lot of people think it's a four-letter word, but it's a contact sport. If the average home buyer buys or sells a house every 7 to 10 years, what are you doing in the meantime to keep in touch with them? Bring me out to talk to your clients or your center or your sphere of influence. You sat through the presentation. There's no sales pitch. It's really just valuable information that people aren't going to hear otherwise. I'd love to schedule some sort of client appreciation event. We'll do some wine and cheese. You bring me in, you're going to look good in front of your clients. I think that's a good way for you guys to stay relevant. Letter C, kind of a catch-all. Maybe there's something else that I said about retirement planning or investments or insurance. If you don't fill out the form, I won't bug you. I guess I'm really out of time. But thank you guys very much for being here and being an awesome audience.